a really packed agenda for today, and we'll quickly get to it. But what I can say is that this webinar is coming at a critical time for us as tax practitioners and taxpayers in Nigeria, given the fact that now the new tax laws have come into effect, and there have been some teething problems. Also, a few issues have come up, which a lot of our clients have asked us questions around. So we thought it would be a good, thing to kind of put this event together, where we kind of share our thoughts around the journey so far, and also bring in, you know, the regulators as well to also give their insights. Um, next, next slide. So again, if we look at the agenda for today, right, the agenda for today for us kind of, mirrors the way where we want to kind of approach the engagement with taxpayers, and just to give a sense of, one, what does the tax reform mean for you? If you consider the fact that at the moment the laws have come out, but again, there's a lot of questions have been asked around the application of the law, around, would there be any grandfathering of provisions and all that, given some of the issues that have been raised so far. Then we'll just kind of take you on the journey of implementation, some of the insights that we've gotten so far, whether it's from the regulator's perspective or from the taxpayer's perspective. Then, because this webinar is focused on Nigerian resident company, we'll also kind of walk you through the strategic implications for resident companies, and just what are the things you need to think about as a company that's resident in Nigeria, from the perspective of, what has been applied so far. Then again, we'll just look at tax technology and some of the enablers when we're looking at the middlewares and systems integration, because one of the things we've tried to do with this webinar is also kind of bring a focus to tax technology and e-invoicing. So while you look at the implementation insights and looking at the tax reforms, this webinar will also try and direct our thinking around what it means in terms of, tax technology and e-invoicing. Obviously, we'll look at lessons learned because, again, as a systems integrator, we have been, sorry, say no audio. Can you all hear me? Yes, okay. For me, perhaps you may want to check your settings because people can hear me. So you probably want to check your settings. So again, we want to also kind of confirm, lessons learned, because a number of we've done some of these implementations, and we're also going to be sharing some of the lessons we've learned and some of the best practices that we've kind of either implemented or come to develop over time. And obviously then there'll be a call to action around what we've all kind of spoken to here and kind of next steps as well. So again, this for me is going to be very interactive, and please feel free to just, come prepared with your questions as well. Now, in terms of the speakers, we've put together a really strong panel of speakers. The first is Kenneth Erukume, who is a tax reporting and strategy leader. And he has extensive experience in tax compliance, advisory, and strategic consulting across Africa. Ken is a really powerful speaker, and I really look forward to his insights around tax technology. Tim is a partner in also a tax reporting and strategy unit, and he is Kenyan, and I like to call him a Kenyan Nigerian. Tim is the partner primarily in charge of tax technology, and he has also kind of been driving a lot of what we've been doing in the tax technology space. And then Farida, who is our tax technology leader, you know, she leads the tax technology team, and she has significant experience in digital development, software system design, and also she drives a lot around the technology policy advisory as well. And then the external speaker from the NRS is Mohammed Bawa, who leads the NRS e-invoicing project. He's in charge of driving the rollout of the e-invoicing solution to enhance tax efficiency, compliance, and transparency. So you can see that, you know, I think, you know, for me, I'm extremely excited about how this conversation is going to go, because not only are we getting some insights around the reforms themselves, but we're also deep diving into technology, which for me is the bedrock of what we're doing in the future from a tax standpoint. So I'm going to hand over to this first speaker, who is Timothy Siloma, to take us forward. And I look forward to a great interaction with you all. And over to you, Tim. Thank you.
Mic check, just confirming everybody can hear me. Thank you very much, Chijioke, for having me on the panel today. I would like just to start by saying there are two certainties in life: death and taxes. But I dare say today in Nigeria, there is a third certainty, a new era of radical tax transparency fueled by technology and data. Dear listeners, allow me to hold your attention for just a few minutes so that I can unpack three things about this new era: the why behind it, the how it is unfolding, and how you can turn this into a strategic advantage. To understand this new imperative, we must understand the why. Currently, Nigeria faces three structural challenges that must be ruthlessly tackled with utmost urgency. I call them the triple whammy. Number one, the oil trap. For decades, Nigeria has relied on oil revenue to fund the national budget. The downside of it is that our budget is dangerously exposed to the mercy of volatile oil prices. This is just a roller coaster that we must get off. Number two, I call it the gap. The national tax to GDP ratio in Nigeria is about 10%. Compare that to the African average that sits at about 18%. Here lies the problem. I call it the hidden economy. Not only does this hidden economy not contribute to the fiscus, but it places an unfair burden on compliant businesses like our participants today in this webinar. Number three is the cost. The cost of tax collection in Nigeria is about 4%. The global average, just 1%. Maybe the question for you, is it sustainable? And I dare say the answer, it is not sustainable. So how do we address these structural challenges? The answer has been provided to us by the administration of Bola Ahmed Tinubu by radically increasing the pace of the tax reforms through 4 new pieces of legislation. The tone at the top is clear. Fixing the fiscal landscape in Nigeria is no longer just a goal. It is a top national priority. Next slide. Thank you. So how are these new tax reforms being implemented? The current administration is moving forward with what I call a 2-pillar solution. Pillar one, and I touched it on my previous slide, is the strategic overhaul of the legislative framework. The objectives of it are clear. Push the national tax to GDP ratio to 18%. Number two, collapse approximately 60 taxes down to a single digit. And finally, to fundamentally improve the ease of doing business. Often the North, we have spoken about how it is hard to comply with the taxes because it is a hard business doing it. But then the law is just paper without pillar two. So pillar two is the digital infrastructure and data foundation. Over the years, Nigeria has embarked on the first critical step, e-filing, what I call the digital engine, by moving the tax compliance processes from paper-based filing to online filing. However, this digital engine requires fuel. That fuel is data. Now, the tax reforms, as how they have been structured, seek to integrate tax data on one hand and other data sources from the taxpayers, financial institutions, and MDAs alike, moving strategically from a siloed ecosystem to a one unified data-driven ecosystem. This is critical and crucial because only then and only if you have a one singular data-driven ecosystem can we have a single source of truth to tax the hidden economy. Next slide, please. Now, this really brings me to the heart of the discussion today. The $1 million question is, what is the single most powerful tool that a forward-looking tax administration can use to achieve transparency, efficiency, and accuracy? The answer is really simple: fiscalization. The logical evolution for all tax administration is fiscalization. The administration here really seeks to pivot from reviewing transactions after they happen to accessing that information from where that information is being generated in a real-time manner. Think about it. One of the most difficult areas for tax administrations and taxpayers alike is administration of VAT and withholding tax. This, coupled with the fact that we have a significant hidden economy in Nigeria that needs to be brought to light, fiscalization is the ultimate game changer. Just to echo the words of Chijoke, what is the call to action for you guys on this score? One, there are three things that I would like to leave you with as the call to action. One, you need to acknowledge the momentum. The political will to modernize tax administration has never been stronger in Nigeria. And the pace is not slowing down, but accelerating. The next one, as you need to ask yourself is your data audit ready? Let me unpack that. Very soon, your transactional data will determine your tax position. What does that mean? Going forward, garbage in will not only result in immediate and automated tax consequences. Just let me give you a quick overview of what is happening in my country, Kenya. Currently, Kenya has moved into what I can call full fiscalization. One, you cannot claim expenses that the revenue authority has no oversight of. Yeah. So it means that Not only have you incurred money for an expense, but that expense cannot be claimed because the revenue authority has no visibility. Therefore, every transaction you carry has an immediate and automated tax consequence. Finally, there is need to shift gears. The position of you guys as stewards and leaders that are charged with the responsibilities of tax administration in your organization must change from one that is a reactive stance to a proactive strategy. What does that mean? In order to survive the new physical landscape, the new reality, you need to streamline your upstream data. It is not good practice anymore. It is a strategic necessity. Very important. With that, I'll hand over back to Farida to lead us into our next panel discussion. Thank you.
Thank you very much, team, for that clear and comprehensive overview of the Nigeria's new tax reforms, particularly around fiscalization. You've highlighted the government's push for transparency, combating tax evasion, and elevating compliance standards for companies, which is setting an important foundation for our discussion today. So next we have Mr. Bawa, who will share valuable insights directly from the Nigeria Revenue Service. He'll take us through the practical journey of implementing these reforms, outlining the timeline, challenges faced, and how collaboration with industry stakeholders has shaped the rollout. Mr. Bauer leads the e-invoicing projects at the NRS, driving the rollout of the Nigeria's digital e-invoicing solution to enhance tax compliance, efficiency, and transparency. So over to you, Mr. Bauer. Thank you.
Thank you very much, Farida, for that introduction. And also, I want to use this opportunity to thank the management team of PwC for putting together this webinar to add to our adoption drive. I also want to thank the previous speaker for laying the foundation for this webinar. So I'm going to speak in from the FRS perspective on the journey, on the implementation journey so far. So from the FRS perspective, the e-invoicing aligns with our digital transformation journey, which we have been planning over the past few years, which also aligns with the global digitization, tax digitization agenda. So if you look at it globally, different tax administration bodies are digitizing their processes, transiting from tax administration 1.0 to 2.0 to 3.0. So in FIRS, we've also aligned with that journey. And currently we are at 2.0, and the e-invoicing is going to enable us to proceed to 3.0. So you remember when we're at 1.0, when all our processes were manual, before the coming of Tax Pro, when we automated the interaction of all our processes with taxpayers, making it possible for taxpayers to do their businesses from the comfort of their homes and offices from everywhere in the world. Now the invoicing is going to make it possible to achieve a system-to-system integration, to be able to have visibility over all the transactions that is happening, which will make us to validate all tax declaration. To ultimately improve revenue and improve compliance generally. So that is the perspective of FIRS with respect to the e-invoicing. And so far, next slide, please. So with respect to that, in alignment with that journey, we started the invoicing journey 1.5 years ago, precisely in 2024. Mid-year, we conceptualized the project and designed it in such a way that the implementation will be done in phases, knowing fully well that Nigeria is a large country with large number of taxpayers and with, of course, large number of informal sector which the e-invoicing seeks to formalize eventually. So we knew that the implementation will have to be done in phases for ease of adoption. So the project was broken down into 3 phases, starting with the large taxpayers with a turnover threshold of greater than 5 billion naira. Now each phase also has about 5 deliverables, starting with the robust stakeholder engagement to allow the FRS team design the solution in alignment with the peculiarities of the different business models in each sector. And then after the engagement, we had to do a pilot, for example, for the large taxpayers. And then after the pilot, we announced the go live, which went live in November. Initially, it was 1st of August 2025, and then it was postponed to 1st of November. And by the go live date, so many of our large taxpayers have complied with that go live date. And so many currently are at different stages of integration to actually also fulfill that go live mandate. Now, the next step is for us to actually review the implementation, especially with the large taxpayers community and other stakeholders like the service providers and other professional bodies to determine areas of improvement, and then before management will actually decide on the enforcement date for non-compliance entities. So currently, this is where we are with the large taxpayers, and based on our initial long-term plan, the 2026, we're also supposed to do something similar for the medium taxpayers, to go through all the different deliverables like we've done with the large taxpayer. And then next year, we'll also do extend it to the small and emerging taxpayers, right? So that is a long-term plan, but this is still yet to be formalized and officially announced by the FIRS. So at the moment, the management is working on finalizing the timetable that will be made public for every taxpayer to know how this invoicing affects it and when is the effective date for each category of the taxpayer. Now, based on what we've done so far with the large taxpayers, some of the challenges we have faced include, for example, now, the invoicing is also riding on an existing system, for example, like the tax promax, so which also without it wouldn't have been possible for us to talk about the invoicing now. So we had challenges with legacy data of taxpayers during onboarding the processes, because so many of the taxpayer data, like email, which the onboarding relies heavily on, some of them were not correct. Some of the emails were for staff that have left the companies, and which made it impossible for the onboarding to be concluded. Now, because the taxpayer data is a sensitive information, that will require it to be updated at the tax office, so it's created some challenges and delays for entities to be onboarded, right? At our end, we try to mitigate that by providing options online where taxpayers can actually do the update, right? And also receive to do a password reset in cases where they were unable to get emails and all that. We've also noticed that so many sectors have their own peculiar nature of business, which necessitated the need for the MBS system to be made flexible to accommodate different business models. As I'm speaking to you, every day we see new challenges, new use case scenarios for us to accommodate that in the system, and we have been doing that. We also notice we also have this misconception about e-invoicing and the tax administration system. A lot of taxpayers actually assume that the e-invoicing is coming to replace the tax administration system. So we had to make it clear that for now it's purely a data gathering system that will allow the service have visibility over transactions. Filing will still be done on the existing tax administration system, which is the tax promax, right? Until such a time where we record a high number of adoption before things like automated filing of returns can happen seamlessly between the two systems. So these are some of the challenges we have faced. We've also seen intent to become service provider by several companies, which we made it clear or the process of becoming that. Right, so the process is clearly defined. You have to go through the NIDA accreditation process. You meet all the requirements, and then before you can onboard you on the e-invoicing system. Now, in terms of collaboration with industry stakeholders, we have done quite a lot on that. In fact, for FIRS, from the beginning of the project, we designed the system in such a way that to encourage participation of all stakeholders. From the ecosystem, you can see we have different roles for service providers to be access points, to be system integrators. We've also given opportunities for taxpayers to do the integration themselves if they have the capacity, right? We've also encouraged the participation of professional bodies, right, to drive the adoption of this solution. So that has made it easy for the product to be sold across to Nigerians, because people see the benefits from different perspectives. So we've sold it in such a way that as a business, there are a lot of benefits you can get by implementing the invoicing, not just from the FRS perspective of collecting more revenue for the government, and also from the taxpayer, from the service provider's perspective. We've also we've also shown how value addition can be encourage service providers to come up with different solutions, value addition services through their system integration solution and access point providers to help the taxpayers comply easily with the tax laws. Right. On our part, we've also developed a developers community where taxpayers can engage directly with when they are doing their implementation and they encounter one or two challenges, so they can easily go to that community and ask the question and it will be answered. On our platform, you can also schedule an engagement with our team, right? So we have a calendar there that anyone can go, whether a taxpayer or a service provider, schedule an engagement, and we'll send a meeting link with a 30-minute slot to answer all the questions. Currently, we're working on developing a simulation portal that will allow the taxpayers and service provider to simulate all the processes and end-to-end, from onboarding to invoice generation, invoice transmission, to even before they start doing their implementation, right? All this is being done to make the adoption very easy for all taxpayers. So far, this is what we have done. Thank you very much.
Thank you very much, Mr. Bauer, for that insightful implementation perspective from the Nigeria Revenue Service, along with the roadmap and real-world challenges tackled during the e-invoicing rollout. Your discussion has really given us a clear understanding of the operational side of these tax reforms. So thank you for that. Now, Kenneth will build on that by exploring the strategic implications for resident companies, how businesses have had to adapt, compliance challenges they face, and the competitive edge available to early adopters. Kenneth is a partner and Chief Operations Officer at PwC in Nigeria, and he also leads the tax reporting and strategy for the West Market area. Kenneth, over to you, please. Thank you.
Thank you very much, Farida, and thank you, Mr. Bauer, for giving us that insight into what the government is doing. My job here really is for the next few minutes to actually talk about the strategic implications for resident companies. And, the way to look at it is, these tax reforms, and the debate is, very much in the public space. Is it intended to increase taxes, or is it intended to drive efficiency? So the first question on whether it is, meant to increase taxes is debatable, depending on which side of the divide you're sitting, right? So for some people, you know, the taxes will go up. For some people, the taxes will come down. When you look at it in terms of the tax rates that have been increased, it's not many. You look at, for example, in the solid mineral sector, the royalty rates have been increased. You look at, you know, disposal of capital items, the rates have been increased from the previous capital gains tax rate to the income tax rate. And there's been a lot of conversations around shares. But what I usually tell people is that that's one of the easiest capital gains tax to avoid because of its, you know, once you reinvest into the shares of another Nigerian company, then the historic gains are permanently exempted. But there are also opportunities within the tax reforms as well, with the expansion of the opportunity to claim input VAT on, you know, both overheads and capital items as well. And, you know, having conversations with government personnel on this, it's one area where if you keep the 2025 VAT collection constant, they expect that they would lose because, you know, the initial intention was to increase the VAT rate to 10% and ultimately to 15% over time, where the government would actually lose a lot of revenue. But, you know, looking at things on balance and, you know, the PIT, I think people have seen their salaries and how it impacts on that. But looking at things objectively, it's not about the increase in the tax rate or the reduction in the tax rate. I think Tim painted the picture clearly. You know, if you look at the big picture of what government is trying to do, they're trying to get multiple sources of data, and it's not just about e-invoicing. So e-invoicing is just one component where government will be able to see the economic activity happening, depending on the phase of implementation as described by Mr. Bauer, where government will then have a full picture like what you have in Rwanda of seeing every economic activity. Remember that the sales from one person is the expenditure of another person. And if you look at the tax reforms, they've built into it one you know, important aspect that says that if you do not pay import duty or pay VAT on an expense, you cannot claim a deduction for corporate tax purpose. So, you know, it extends beyond just, you know, I want to comply with e-invoicing, but looking at the big picture of what this means. Apart from e-invoicing, there are other areas where government is looking at, you know, data transparency and tech enhancement. So one of it is with the bank and other financial institutions that have to submit returns of individuals that is above 50 million in any month. If the cumulative turnover of that individual is more than 50 million in a month, then the bank or other financial institution has to submit a return of that individual to the Nigeria Revenue Service. Similarly, if it's a corporate above 250 million, but there are other returns that, you know, the government sits with. For example, the common reporting standards, the automatic exchange of information between Nigeria and other countries, where the tax authority in other countries are sending information around Nigerian residents back to Nigeria. There's also the Unified Tax ID project that essentially would harmonize all of the tax IDs across the different states, and work is already going on with the Joint Revenue Board, so that when I pop up in Abuja or I pop up in Ondo State, it's the same tax ID that is unique to me that is utilized. And when you look at the big project that government wants to do with that, they want to be able to look at that tax ID and be able to link it to the taxpayers' spend, invest, or save activity to properly profile that taxpayer. And then in the Nigeria Tax Administration Act, it also allows state collaboration between states and the Nigeria Revenue Service and the Joint Revenue Board to actually have a platform that everybody can connect to. So with this sort of big picture, government will then be able to have visibility over transactions. Now, the question will then be for Nigerian corporates, what do you do with that information? Now, we've been having series of conversations, but there is no appetite from government at this time to put people in different buckets and say, if you're low risk, then you'll be exempted from audit. If you're high risk, then you'll be audited, and so on and so forth. And if you look at what has happened in a country like Kenya, as an example, with the fiscalization, when you're filing your returns and the expense was not fiscalized, the government would automatically disallow that expense. So it creates a huge problem. And if you go back to my previous slide, Israel, that the expectation actually is that those large compliance businesses, the MO of the government is not going to change overnight. They're not going to suddenly adopt cooperative compliance. The way Nigeria currently operates, and is going to operate for the foreseeable future until things change, is that every single taxpayer, company, or individual would be audited on an annual basis, irrespective of the strain it puts on government resources and irrespective of these new sources of data. So there could be potential for additional penalties and interest and additional assessment because government would have more information, with the data they're receiving from all these multiple sources. And the expectation is that the large taxpayers will then pull in the tax evaders into the tax net through fiscalization, through things like withholding tax, and just the sheer amount of data that government is going to have. So that's where the big revenue is going to come from, like Tim said, from the hidden economy, big capture, but even the so-called, because you can say, well, my corporate governance is good, we do the right thing. There is a trust deficit between taxpayer and tax authority. So if I do a poll and say, do you trust the tax authority? How would that poll go? And if I do vice versa and say, do the tax authorities trust the taxpayers? So until that trust link is fixed, we would continue to have that sort of situation where, government will be, continue to look at, audits, investigations into corporates. Next slide. Now that poses an immense risk, guys, because what that means is if government has adopted technology and government has the data, but you have not adopted technology and you have not sensitized your data for tax compliance, that you would be at a significant disadvantage. Now, so-called compliant taxpayers could be exposed because you don't have documentation, you have no capability, your systems do not have the capabilities to do reconciliations that can be unequivocal evidence for the tax authorities. And then if you have poor tax controls and systems, that could also be a problem. So in this new dispensation, those could be triggers in a high volume environment for significant additional liabilities. So make no mistake, invoicing, it comes with some benefits, but there's a big picture as well, that you don't just limit your outlook to just e-invoicing. How can I use technology to serve my purpose in my tax function? And that's a big dilemma, because many times when people are talking about technology and systems in organizations, the finance team hops on it, the tech team hops on it, but the tax team, doesn't hop on it. And this is where the opportunity for e-invoicing comes, because for the first time in a tech conversation, tax, is taking the lead in those conversations. But you can use that as an opportunity to then look at other areas where technology can enhance your output as a tax function. Next slide. Now, let's look at some examples, because we have laid it out theoretically. But let's look at some of the examples of where we have problems, potentially could lead to exposures, and could be an opportunity to enhance your technology. And this is where the paradigm shift comes in. The first one is withholding tax. Now, many companies do not have an institutional knowledge around what rates to apply to transactions for withholding tax purposes. It is interesting that in the age of AI, many companies are still doing that manually. And then the person doing that withholding tax schedule on a monthly basis leaves, and then the knowledge is lost. The second thing is the tax authorities would always use the trial balance to rationalize and say, well, this transaction rent, this transaction technical service, this professional fees, withholding tax rate 10%, 5%, and then say withholding tax payable, withholding tax already paid, additional withholding tax payable. And many companies are caught on an annual basis with additional assessment without even dealing with their technology. And when the government does that, they push the onus of proof to the company who has done, one full year of transactions to prove that what the tax authorities computed is wrong. Now, with technology, you can resolve all of that. And there are off-the-shelf, already developed products, both within PwC and out there that can actually solve this problem. Like I said, this is old machine learning. AI takes it to another level. Then, the withholding tax regulations 2024 requires customers to issue withholding tax receipts, right? And once you issue the receipt, the customer can use it to set off their tax liability. It doesn't say wait for the tax authority's credit note. The problem some people have is that their suppliers are many, so it's high volume. And then if you do not issue those receipts and the tax authorities maybe do not recognize the payment, then you have a gap if there are no credit notes or the credit note was not issued and it's lost. There's also the issue of the 40% penalty if you do not get your withholding tax deductions right. Now, all of that, again, can be dealt with through automation of your systems to be able to send out those, once the schedules are produced, payments are done, send those schedules automatically, emailing the vendor automatically with that evidence. Now, again, there are use cases of this in actual fact, real life, that it has been implemented on, off the shelf, and things you can do within your organization. VAT is also an incredibly interesting one as well, because now the VAT you incurred directly to produce a VATable product, you can claim the VAT. And then if you both do VATable and non-VATable products, you can prorate, expenses that are not directly linked. But having that logic that directly links an expenditure and then does the automatic proration for other expenses would be crucial. Treatment of VAT taken in the account but does not qualify for input VAT. When you've taken to the VAT account, how do you then take it back into the expense if it's a capital expenditure? And how do you track your refunds? And then you have the 100% penalty for wrong refunds. If you claim your refunds wrongly, you'll be charged 100% in addition to not being paid the refund. So again, significant risk there that a VAT data check automated system can actually deal with if you embrace technology. And interim corporate tax provisioning is another use case where, on a monthly basis, if you prepare monthly accounts or you do interim accounts and you pay interim dividends and things like that, if you're listed, automating that tax computation, it doesn't have to be done manually, right? Because it's not precise. It has to be a true and fair view. Once you have sensitized the different accounts and the treatments, then that can be automated and produced automatically. Again, there's also the IS 34 treatment of the weighted average annually effective tax rate, which is based on the budget and how that works out to the tax rate that is included in the tax computation. So these are just examples of areas where we can embrace technology and use that to minimize risks, while the tax function and the organization focuses on optimization, looking at areas like the economic development incentive, whether they qualify, the priority sector, optimizing on their VAT credits and things like that. So e-invoicing is a big opportunity. And I'm sure my colleague Farida would, expatiate more on that when she goes through her conversation. Thank you.
Thank you very much, Kenneth, for that insightful overview of the strategic implications of Nigeria's tax reforms for resident companies. Your discussion on compliance challenges and particularly the advantages of early adoption really sets the stage for us to understand how technology can now be an enabler in this transformation. So thank you for that. And now I will take us into the technological realm, focusing on the essential technology stack required to support efficient e-invoicing. I'll also introduce Invoice Tracker, which is PwC's middleware solution, discuss the importance of the system integration license, and also share some of the case examples from our experience supporting companies to be compliant with e-invoicing. Next slide, please. So as tax authorities around the world mandate real-time or near real-time invoice reporting, businesses face increasing pressure to adapt their systems quickly. Non-compliance can result in significant penalties. So it's critical to have seamless automated processes. So this isn't just about avoiding penalties. Effective integration enhances your data accuracy, your operational efficiency, and visibility across your entire tax functions. It sets the stage for broader digital transformation in tax compliance and reporting. Next slide, please. So let's take a look at the core technology stack behind e-invoicing compliance. So at the heart, you have your ERP systems, that is where you generate invoices and maintain your business master data. However, tax authorities now require invoice submission in specific compliant formats and protocols, which are the JSON and the XML format. And this is where system integrators like PwC's middleware provide a software that validates, formats, and manages those invoices to ensure that they meet the tax regulatory standards before submission. Now, next is the access point providers. Who are the access point providers are the stakeholders that provide a secure gateway transmitting invoice data from the middleware, that is from the system integrator, to the government's fiscalization platform. In this case, that is the merchant buyer solution, or the MBS. And then in the middle of all of this, or the thing that brings all this together is the API. The APIs enable real-time automated communication between all these layers and all these multiple stakeholders within the fiscalization system. ensuring that data flows smoothly without manual intervention. Now, most importantly, right, is the security controls and security protocols, such as encryption, digital signatures, and secure protocols that are embedded across the entire stack to protect data integrity and confidentiality. So this end-to-end system integration creates a resilient, scalable, and compliant environment for your e-invoicing needs. PwC is proud to be a certified system integrator approved by the tax authorities. So this certification means that we have the expertise and technology solution to connect your ERP systems to the mandated platform like the NBS efficiently and compliantly. We provide ongoing support to help you stay ahead of the regulatory changes and also mitigate implementation risks, helping you focus on running your business while you're staying compliant. Next slide, please. So we have developed a solution called Invoice Tracker, and Invoice Tracker is a middleware software that delivers an end-to-end compliance process for e-invoice. And I'll walk you through how Invoice Tracker works and how it facilitates that e-invoice compliance. So first, your ERP system submits an invoice, either a credit or a debit note. It submits that invoice data directly into the Invoice Tracker ingestion flow. Now, Invoice Tracker then performs a schema validation, checking that every invoice payload complies with the Nigeria Revenue Service technical and regulatory requirements. If there's an error, it immediately reports back to your ERP for any correction that you need to do, which prevents you from being non-compliant upfront. Now, on successful validation, Invoice Tracker now generates an invoice reference number or an IRN, and also prepares a QR code data that is going to be linked to that specific invoice. Now, once that is done, then the invoice data is then transmitted through a certified access point provider. If you remember in the technology stack, I mentioned there's a system the ERP, the system integrator, and then the access point provider before the merchant buyer solution. So this is where the access point provider comes in. The invoice data will be transmitted through an access point provider to the Nigeria Revenue Service merchant buyer solution for fiscalization. So within this space, then the NRS or the MBS would now process the invoice and return a validation response. If there is any error, it triggers an immediate feedback, which is now returned to you through Invoice Tracker. And if the validation is successful, a signing request is made to the NBS, which returns a fiscalized invoice. And finally, Invoice Tracker would now return that fully fiscalized and validated invoice back to your ERP for operational use. And once you get that invoice and you send it out to your customers or your suppliers or your clients, and they make a payment on that invoice, you can easily update your payment status on your ERP, and Invoice Tracker pushes that payment status update back to the NBS platform to update that status of the fiscalized invoice within the NBS ecosystem. So throughout this entire flow, there's a centralized dashboard that helps you track every invoice status in real time. So this visibility empowers tax, IT, and operations team to monitor invoice lifecycle seamlessly, and also supports audit readiness because it allows you to, download a set of invoices within a period of time for you to be able to either review or even if it is for the purpose of doing the audit. Next slide, please. So Invoice Tracker supports two main integration options. First is the API integration, and then we have the dashboard integration. And I'll walk you through the differences and how businesses can determine which one of the integration options would help them stay compliant with the e-invoicing requirements. So for API integration, this is a direct system-to-system connection between your ERP and Invoice Tracker. So this is the preferred choice for businesses with existing ERPs or accounting systems and also have a high invoice volume, typically over 1,000 invoices per month. Although API integration requires ERP configuration and technical expertise, it also provides real-time, fully automated invoice processing and full stack customization that fits your needs. I'll take us through some of the cases that we have experienced doing this implementation in the field. We've had cases where our clients would want a specific type of customization, even within the API to ERP integration, which we also provide. Now, the second option is the dashboard integration. Now, the dashboard provides a web-based interface where invoice data can be uploaded manually or semi-automatically. So this option suits businesses without ERP systems. These are businesses that have low monthly invoice volume, typically around 1 to 400 invoices, or companies that prefer not to do direct ERP configurations. Now, this dashboard method is very quick to deploy. It doesn't require any technical expertise or ERP configuration to set it up. So both integration types ensure compliance and visibility, allowing you flexibility based on your technological maturity and your business's invoice volume. Next slide, please. So let's look at some of the common use cases we've encountered in the field doing e-invoicing implementation. One of the biggest cases that we've encountered is businesses running multiple ERP systems. This means that it's either two things. Either you have multiple ERPs, and when you're generating an invoice, that one invoice would have a touch point between all those multiple ERPs. Or you have multiple ERPs and accounting systems, and you generate different types of invoices from those multiple ERPs. Now, the challenge with that is managing diverse invoice formats across those multiple ERPs, which creates a consolidation challenge for compliance reporting, leading to data inconsistencies, delayed submissions, and operational silos. So what Invoice Tracker does for those kinds of businesses is it extracts and unifies invoice data from those multiple ERPs into a centralized master database. It then centrally normalizes and validates that invoice data to ensure consistency with the NRS's Merchants Buyer Solution schema compliance across all the ERPs. Then it now prepares the IRN, which is the invoice reference number, and the QR code before sending it to the MBS for fiscalization through the access point provider. Now, next slide, please. So another case example that we have encountered is the multi-entity and multinational group structure. So the major challenge with that is managing invoices across multiple legal entities or subsidiaries and ensuring data privacy between those entities while complying with group level reporting needs, and also coordinating a group-wide compliance without compromising operational autonomy. So what I'm saying here in essence is we've seen cases where you have a company, a group holding structure, but you also have subsidiaries. But those subsidiaries, they actually have separate operating models. They have a different, for example, different CFO, different COO, different operational teams. So in that case, you want to comply as a group, but you also do not want to compromise the privacy between all those sub-entities. So Invoice Tracker allows you to create multiple business entities to mirror your organizational structure. It also allows you to assign user granular roles and privileges tied to one or more entities, which now in turn restricts data visibility to only the authorized scope of your role and privilege. And then it also provides your specific entity dashboards to allow you, monitor your invoices and your invoice lifecycle management. Now, next slide, please. Okay, so another case that we have encountered is businesses that actually do not even have ERP systems. These are businesses that operate without any dedicated ERP. And the challenge there is lack of automated invoice generation and submission tools. They usually either use Excel or any other manual process to raise their invoices, probably because they have very minimal invoice volume. We've seen cases where the businesses only issue about 2 or 3 invoices in a month. So it doesn't actually make any business case for them to set up a complex ERP just for the purpose of generating 2 or 3 invoices. Now, such businesses can utilize Invoice Tracker's dashboard, which functions as a lightweight ERP and has a user-friendly dashboard to help generate the invoices and get them fiscalized. Now, that lightweight ERP allows you to set up your products and services. It also allows you to set up your suppliers and your supplier information. And then you can now generate your invoices using, because it has already been preset with the NRS's, schema and the NRS's standard. So you just generate those invoices and then you send them to the NBS platform to be fiscalized. Now, another consideration is large manufacturers. Large manufacturers, they rely heavily on extensive distributor networks to move products to market. So ensuring that these distributors comply with evolving e-invoicing and fiscalization mandates is critical to maintaining uninterrupted operations and also meeting the tax authority requirements. So, and then even if manufacturers have robust compliance systems internally, non-compliant distributors can cause significant business disruption, such as maybe delayed shipments or rejected invoices or, several kinds of operational disruption. Now, at PwC, we partner with such large manufacturers, not only to optimize their internal tax technology stack, but to also support their distributor networks. So this includes either educating distributors on regulatory mandates, assisting them with technology onboarding, and providing the middleware solution and integration for them to be able to be compliant with the regulatory changes. So in all, proactively managing that distributor compliance positions manufacturers as leaders in regulatory readiness. It also reduces audit risk and strengthens relationships across the supply chain. So to wrap up, successful e-invoicing adoption hinges on having the right middleware and integration strategy. Certified system integrators like PwC, like us, provide that kind of middleware solution that validates and prepares your invoices, while access point providers securely transmit those invoices to the merchant buyer solution where the final fiscalization happens. And APIs are the connective tissues enabling real-time data exchange across this ecosystem. And also security protocols ensure data integrity and privacy throughout. In PwC, we combine our deep tax expertise with proven technology to support your digital transformation journey and ongoing regulatory compliance. So thank you all for listening. I think so. From here, I would transition into our Q&A session, which is the panel session, the panel discussion, where I would ask a couple of questions to the previous speakers and we'll get their answers. As we have seen, navigating the e-invoicing landscape requires not only the right technology, but also insights and collaboration across multiple dimensions, from regulatory frameworks to operational readiness and strategic implementations. So to help us put all these threads together, we'll now move into our panel sessions. And this is an opportunity to hear from Team Kenneth and Mr. Bauer, who bring diverse perspectives from government policy and implementation to practical business impacts and strategic leadership. So I'll begin by posing a few questions to each panelist to get us started. Then we'll open up the conversations to our participants to ask their own questions as well. So my panelists, are you ready? Can I proceed?
We are ready for you, Farida. I think many questions will be for Mr. Bauer.
I believe so. I can see my screen popping with a lot of questions directed to Mr. Bauer. But let me begin. Let me start with Mr. Bauer. So, Mr. Bauer, beyond compliance, what long-term benefits does the Nigeria Revenue Service expect e-invoicing to deliver for Nigeria's economy and business environment?
All right, thank you very much, Farida, for that beautiful presentation. To be honest, while you are presenting, I was just shaking my head. I was like, wow, this is exactly what we expected. That service providers like you should be in that kind of position, because you're like, you are making the job so easy for all of us. So I must thank PwC for joining this course. So I'm sure at the beginning of the presentation, I think Tim has touched some part of this bigger picture of e-invoicing beyond just compliance. So if you look at Nigeria's economy, largely dependent on the informal sector, right? And which is making it difficult to improve our tax to GDP ratio, because we don't have visibility over what people are transacting, what people are consuming. So it's making it very difficult for government to properly plan. So the bigger picture, it's going to help us formalize our informal sector. It's going to help us formalize our informal sector. By the time we're able to ensure that more than 92% of our taxpayers are compliant, which means that government now is in a position to see what every business is doing, right? So it will make it very easier for government to plan, to have transparency also. That's where the compliance comes in. But of course, the bigger picture will mean that eventually revenue will also improve, and then we'll be in a better position to improve our tax to GDP ratio, which is one of the lowest in Africa, which does not translate to the quantum of the economic activity happening in Nigeria, right? If you even also look at the number of businesses we have in Nigeria, just take about to look at the number we have registered with Corporate Affairs Commission and compared to the number of taxpayers we have. So I know just at a very low level, I know we have over 5 million businesses doing business registered with CSE. But when you come to our database in FIRS, we don't have up to 2 million taxpayers. So number one, it's going to help us bridge that gap. It's going to help us bridge that gap. So we're already seeing some of this happening for those that have implemented the e-invoicing by simply demanding their suppliers to supply them with the TIN. Now, most suppliers don't even have a tax identification number, and they have been doing business. They have been doing business. So you can see now, for you to do business with anybody, you must be registered with the tax authority. So automatically, it's going to help us bring more people into the tax net, right? We will know now then they are doing business with other business entities, right? And then definitely they will now begin to pay taxes if they're eligible to pay. And then, of course, the picture will now becomes clearer as to who is doing business and who is not doing business, right? So overall, I think this is the bigger picture for us, and we cannot run away from the compliance aspect, because overall, definitely there will be no hiding place for anyone, right? Because everyone will be visible for So I think that's the bigger picture for us. I hope I've been able to answer your question. Thank you.
Yes, Mr. Bao, you actually have answered the question, and I can hear clearly that some of the things that we are going to be looking at in the bigger picture is the informal sector, which has always been a dicey area. We're also looking at bridging the gap between business operations and the fiscalization, the fiscalization system, as well as, you know, the tax reporting system. So that's really important and interesting to hear. Now I'm going to go to Tim. So Tim, how will real-time invoice validation and reporting improve transparency in tax administration? And what benefits should companies expect?
Thank you very much, Farida. Just quick check, mic check. Can you hear me?
Yes, loud and clear.
Okay, thank you very much. Your question is on two parts. One, what is it for tax? What is in it for tax administration? And then the other part is what is in it for companies, right? And I believe Bauer has really spoken into what it really, what the tax administration is out for by talking about the bigger picture. But just to summarize what Bauer has said, and just to make a few touch points on my earlier presentation, what the government is looking for, the government is looking for tax transparency, is looking for efficiency, and is looking for real-time accuracy of that information, right? So what does this mean for the tax authorities? It means that if you think about when I talked about the triple whammy, I talked about one of the key ingredients or one of the key issues is actually the cost of compliance. It stands at about 4% as compared to the global average of 1%. But by ensuring that data is streamed in a structured format into the revenue authority's portal, the revenue authority can be able to sort of build machine learning on top of the big data and be able to analyze that information. Immediately, it can be able to identify any underreporting. It can be able to identify any tax evasion that is happening. That's critical, and it's important for tax administration, because there is really the amount that the government can provide in terms of the cost, right? So this sort of helps them ensure that, one, they're widening the tax net, but also in that widening the tax net and being able to bring new what I call the hidden economy into the tax net without significantly increasing the cost, right? But what does it mean for companies, right? Really, and most of our listeners here are really what I can call compliance-driven taxpayers, right? So often than not, we've heard that the revenue authority focuses on the visible economy or the visible taxpayers, right? So, but what it would mean that the revenue authority has more information and more data to be able to focus on other people that are not compliant. So what can we expect from them? We can expect that first of all, there would be the information asymmetry between the revenue authority and the tax companies is gonna narrow down. Secondly, we can expect this would sort of result in what I can call faster dispute resolution, right? What does that mean for companies? Lower cost of compliance and clear and real-time visibility of their tax positions, which is similar to what the Revenue Authority has in their portal or their systems. Thank you, Farida.
Thank you very much, Tim. And I can hear a couple of things in terms of what's in it for the tax authorities and what's in it for companies. For tax authorities, I can hear transparency, efficiency, and accuracy, while for companies, I hear reducing the cost of compliance and having visibility into their tax positions, which I believe it's very, very key and important as we're going forward. Now, piggybacking on this conversation, I'll come to you, Kenneth. So we often talk about the burden of compliance, but what are the actual strategic advantages or competitive edges for companies that choose to be early adopters?
Okay, so I'll be honest with you. I do not think that the burden of compliance is going to reduce, right? Why? Because the tax authority also has to embrace cooperative compliance and risk-based auditing in its entirety. But what we've noticed across Africa is that, because of the large informal sector, a lot of the tax authorities in Africa do not embrace that sort of strategy. So the Nigeria Revenue Service is not suddenly going to become the Dutch tax authority overnight, right? So while, you can already do your assessments and filing through Tax Promax, and then this declaration gives, insights into information. The only way the burden is going to reduce is if, you exempt companies from tax audit if they fully complied and you can see their transactions. And for me, I don't think that that's gonna happen in the medium term. I think it's gonna happen in the long term as we scale up the tax compliance profile of businesses in Nigeria. Now, the other competitive edge that this can provide is, the utilization of data, right? So you can plug into the same systems or information that is being shared with the tax authority to do some assessment of your business as well. So for example, what are the peak period of sales? Where are the troughs in sales? What is impacting my transactions? Is it weather? If it's agriculture, is it this and that? So there's a lot of data and analytics that you can use the data for as a business, which is not really tax focused. And there's an example of this in one of the cases where PwC stool was used in Europe, and people discovered that takeout in a quick service restaurant improved in certain times of the year, and then the company changed its strategy based on that insight, which was coming from a tax solution. So that's the sort of insight. I think the other benefit would be that there's an opportunity to, with the invoicing, because you have to do your impact assessment and the implementation, that is a detailed process. You now have proof of concept, for invoicing to implement a tax solution. So you can actually go back and say, well, can we do this for other areas in the business to enhance our tax reporting, which the finance and the tax teams could not do historically because there was just no business case, or motivating the business case was difficult. So for me, those are the opportunities and advantages that could come through. In the future, when the tax authorities allow for risk-based profiling and say, well, if you are in this category under certain parameters, you'll be exempt from audit, then there'll be an additional benefit in terms of reducing the compliance burden.
Thank you very much, Kenneth. I think I really like the fact that you gave an example with how data was used to, identify certain consumer behavior patterns, and that information was now used to, change the business strategy. And I can see that that is a strategic advantage for companies that, adopt technology and digital transformation in terms of their tax reporting and compliance. So thank you for that. Now coming to Mr. Bauer. So Mr. Bauer, for companies struggling with this transition, what mitigation steps or support systems has the Nigeria Revenue Service put in place to facilitate a smoother journey and transition?
Thank you, Farida. But I think the answer is simple. Exactly what PwC is doing, right? So deliberately, we have positioned the service providers to mitigate those challenges. You can see from your presentation, it shows that you're already in the field implementing for different taxpayers, and I'm sure you're already seeing some of those challenges. And so both in terms of the system challenges and the tax advisory aspect, you are in a position to provide that. From Kenneth's response now, you could hear he talks so much about the tax advisory aspect of it, the implication of this on businesses on that. So I think the likes of PwC are in a very good position to help us bridge that gap. And that's why we try to promote the service providers and this whole ecosystem. So what we expect from businesses is that we strongly advise that even if you have the capacity to do this implementation in-house, you should at least still engage one of these service providers to support the implementation, because they're in a position to also guide you, not just technically, but also in terms of the tax advisory aspect of it, right? Because it's just not one aspect, it's not a technical thing. And that's why the implementation, you need to have both your finance team, the technical, and, even your business team during the implementation, because most of the issues from my experience are mostly even beyond technical, are business related issues. Use cases of their business scenarios. They will tell you, no, I'm doing this in my business when it comes to how do I implement this and all that, right? And in most of these cases, it's just you need a tax advisor to just advise you. It's not usually a technical thing. So for what we're doing, yes, our doors are open. We will continue to do our workshops and stakeholder engagements to give opportunity to businesses to come forward with one or two challenges to do that. But we expect that service providers like you should be in that position to help us mitigate that. And if it's beyond you, of course, you can escalate to us. I've been engaging with the PwC just like any other service providers. You guys send us questions, emails, sometimes calls, and we try to also respond if you need guidance. And from our perspective, we will hope that relationship will continue, because we believe you guys are closer to the businesses and the taxpayers to be able to make this compliance as seamless and less painful for them to do. Right? We will in the coming days be releasing a lot of publications, guidance, on this, and that is what we hope to continue doing. And just that. So, and then also on our portal, we will also, like I talked about, the simulation portal, which is also going to help. We already have on our portal how you can schedule an engagement when you have an issue. We are going to also decentralize the support system, for the invoicing and the FIRS, to make it possible that wherever a taxpayer is or a business, you can reach out to an FIRS person. Our contact center lines will be made available and all that. But we expect that even with that, we still rely on the service providers to do a lot of work, and so that's basically how we intend to mitigate some of these implementation challenges. Thank you very much.
Thank you very much, Mr. Bauer. I think I'll put a pen on this, your thoughts, because I have a last question for you, which is also related to, providing support during, challenges with respect to implementation. But I'll come back to you and I'll ask that question, because I think it's a question that a lot of people want to hear from the tax authorities on. For Tim, I'll come to you now. So for resident companies navigating this landscape, what are the most critical regulatory shifts they need to be aware of to ensure that they aren't left behind by the reform?
Thank you very much, Faria, for that question. But I would like actually to paraphrase this question and say that it is actually for both resident companies and non-resident companies that operate in Nigeria and are vatable, right? But just to go into your question, right? So in the current day and age, right, we have 4 new Tax Reforms Act or pieces of legislation that have been signed into law, right? So we have the the Nigeria Tax Administration Act and the Nigerian Tax Act. And these 2 pieces of legislation actually codify and embed fiscalization in Nigeria. with e-invoicing as a subset of fiscalization, right? So the reality here is all businesses that operate in Nigeria must adopt and implement fiscalization systems, right? Now, the journey that the FRS started earlier in 2024, earlier in 2025, was a precursor to what the fiscalization or the fiscalization system envisaged in the Nigeria Tax Act and the Administration Act have now bring to the fore, right? Now we see that the immediate people that have to comply are what we call large businesses, businesses that have a turnover of 5 billion and above, right? But as we continue to implement e-invoicing and fiscalization, and as the Revenue Authority learns more about the economy, then you would expect that everybody would essentially be required to come into the tax net. Now, the next thing that really they need to be aware of is there is a really enhanced penalty regime for non-compliance. What are some of those penalty regime? The first one is if the Nigerian Revenue Service should be granted access to your you should be able to grant access to your ERP as the case may be, and they can be able to deploy technology with having given you 30-day notice. Now, failure to comply means that you pay 1 million on the first day, and then you have to pay 10,000 naira for each subsequent day that you don't comply. However, that's not the real driver for change. The real driver is the penalty for you issuing an invoice that is not compliant with the e-invoicing or fiscalization standards. The penalty for non-compliance is 200,000 per transaction that you execute, right? So you can imagine if you're a business that executes 1 million transactions in a month, that penalty compounds. So one of the things that really organizations need to be aware of is the regulatory requirements that have been placed as an imperative into in the Nigeria Tax Act and the Nigeria Tax Administration Act, right? So for the guys that are 5 billion and above and have already started the journey, my advice is for companies that have not started this journey and are below that threshold, they need to start the journey now. It's not a question of if, it's a question of when the Revenue Authority comes to them. So my advice is proactive implementation reduces disruption and non-compliance risks that come with it. Thank you, Farida.
Thank you very much, Tim. I like that last sentence or statement that you made around proactive implementation, reducing the risk of penalties. So my last question to you, Tim, is which categories of these companies do you believe would feel the impact most immediately?
Farida, thank you very much for that question. If I had a crystal ball, I would actually say all businesses, right? But now, since I'm here and I need to hazard an answer, right? The immediate guys that really are going to be faced with immediate is, first of all, businesses that I can say have a significant turnover of 5 billion naira, because they are large businesses and their compliance obligations are now there. And if you dimension the Nigeria economy or the Nigeria sector, you can actually clearly see which are those specific sectors that would fall into this category. What the specific people that would be impacted are companies that have high volume and what I can call VAT intensive sectors. What are those businesses? Large manufacturers, right? Then connected to the large manufacturers, you would have also distributors, because the manufacturers rely on the distribution network to comply. Secondly, you also have people that have multi-site retailers, right? you're a big, you're a retailer, you're operating in Lagos, you're operating in Kano, you're operating in Abuja. That gives you a lot of compliance headache. There are other people that I can also think of immediately are actually financial services industry, right? If you look at how we are, we have taken the approach of implementing e-invoicing in Nigeria, no business is exempt, including financial services. These companies really carry millions of transactions every day, right? So it really means that organizations that are that have high volume and high volume of transactions and have high turnover will need to immediately comply with the e-invoicing obligation. Thank you, Farida.
Thank you very much, team. As we have heard from team, businesses that have large volume of transactions and businesses that rely on the distribution network to effectively operate need to immediately comply because they would feel the impact even more. So thank you very much, team. Now I'll come to you, Kenneth. So from an operation standpoint, how does the e-invoicing mandate fundamentally changes the way businesses must approach their tax reporting and statutory compliance?
Right, thanks, Farida. I don't know how much time we still have for questioning, but there are also questions on the platform, which I think we need to take. And if we cannot complete them, we can get back to the attendees by email with response to their questions. So fundamentally, how does, e-invoicing and fiscalization change compliance? I've said it's not just about reporting your invoice. And I see somebody's question there. We thought it was just VAT, right? Of course, there's the VAT element, but there is the element of understanding what your income is, right? And what your expenses are, because if your suppliers are fiscalized as well, so you can actually trace all the invoice they sent to you. So it's going to impact, corporate tax as well, as we've seen in other countries, where, if you're taking a deduction for an item, but it wasn't fiscalized, there'll be a question of whether that is a valid expense. From a policy perspective, even in those countries, there's been some pushback from taxpayers to say that, that does not invalidate the expense. So that's going to be one area in the future that we really need to look at. And like I said, reconciliation capability, because sometimes you may have invoiced, but you may not have accrued, right? Because that's a deferred expense. And there are some times where you prepay for an item, for example, rent over 4 years, and then you expense it on an annual basis, amortize on an annual basis. So those are some of the peculiarities that people need to think about. That's not just the VAT play. Corporate tax and reconciliation capability becomes important in terms of compliance.
Thank you very much, Kenneth. As we've heard, it is not only a VAT play, there are several other implications as you're looking at your business in a whole. So I'll come to you, Mr. Bao, which is my final question. And I think for the purpose of time, I would stop there. My last question, Mr. Bauer, is, so some companies have mentioned that they submitted extension request letters to the Nigeria Revenue Service regarding e-invoicing, but have not yet received a response. So how is the service addressing these communication gaps?
Thank you, Farida. Yes, I can confirm we have received several letters, especially towards the end of last year, in anticipation of the implementation of the new tax act. But management, in its wisdom, preferred to not to respond individually to each letter because there were so many. So like just like we have done in the past, management decided that their response will be by way of public notice, which is going to affect every step, every business, not just individual businesses, and that's why management has been silent. because the focus of the NRS management at this stage of the implementation is actually to encourage voluntary compliance. How do we ensure that people adopt and comply with this? So we need to push for the adoption, right? Not to penalize, right? So our initial lesson is not to penalize. We know at some point penalty will come in because the law has specified penalty for non-compliance. But understanding where we are as Nigerians, the challenges, the nature and all that. So I think management is trying our best to see how we can push for compliance, right? So that even if we have to enforce and penalize, it will just be the few non-compliant ones. We don't research coming to penalize majority of our taxpayers, which means that we also probably did not do what we're supposed to do. So what we're trying to do is to, as much as possible, educate people on the need to comply, show them the benefits, just like what we're doing with you guys, right now. And I believe so many people that have joined this call that have not onboarded, I'm sure a lot of them will go and onboard, now knowing the importance of it and the likely consequences of non-compliance. So that we'll continue to do. We are going forward going to be more clearer in terms of the implementation timeline. And this is what we have not done previously, right? A lot of people have asked us for a timetable, with respect to each deliverable of the implementation, and which we are working on. And we are going to make it very clear, and with even timeline for enforcement to be there, so that people are well guided, right? And they will do what they need to do what I can assure is that before the NRS will penalize any taxpayer, there will be enough notice, for people to know that, okay, if I don't comply by this time, then penalty will come. I don't think the NRS will just wake up one day and start penalizing. That's not what we're trying to promote, right? So what we encourage taxpayers always, even when they write, we say, go and do what you need to do. Don't focus more energy on getting an extension. That time that you're using to go and get extension, channel it to the implementation, so that even when we come to enforce, we'll see the effort you have put in, to implement. And we receive a status report on the different implementation stages of different companies that are using our service providers. So we have a view to how many taxpayers are currently doing the implementation from the report we receive, and we'll continue to monitor that, right? So if you have written and you have not gotten a response, be rest assured that management will respond, but by way of a public notice, which is going to affect every taxpayer. But for now, while waiting for that response, we encourage you to commence your implementation as soon as possible, right? So that by the time the clearer picture is revealed, you will not be late, right? So that's just what I have to say for now. Thank you very much for it.
Thank you very much, Mr. Bao, and we're really looking forward to seeing that public notice and guide, as well as the timetable, because it would enable not only the taxpayers, but even service providers like us as PwC to be able to provide, guidance and advisory for our clients and the companies that we're providing service to. So thank you, Team Kenneth and Mr. Bauer, for all those insightful responses. We'll now open the floor for questions from the audience. Please feel free to submit your questions via the chat box, even though I know that I've seen quite a number of questions coming into the chat box. So I'll take them and I'll direct them to the appropriate panelists. For the purpose of time, I think we have about 5 minutes to take this Q&A session from the public. So I would take, let me look at the questions we have. Okay, so there's a question from Mr. Inkem Joseph Palmer. And the question is, how can private software developers key into the adoption process? Would the Nigeria Revenue Service APIs be available for integration? And if so, how can they be assessed? I think this question is for Mr. Bauer.
So I don't understand his question. He said, as a private sector, he wants to participate. So if you are in the private sector and you can provide the service, the only way to participate is by going to the MBS portal, mbs.gov.ng, where you read all the information regarding how to become a service provider, either as a system integrator or as an access point provider. The requirements are there. If you meet up with the requirements and then you sign up on the portal and do your registration. The registration is handled by NIDA, which is the body in charge of the accreditation process to ensure that every requirement is met. So once you have passed that process, they will issue with a NIDA code. Then you can come to the e-invoicing site and put the NIDA code, and you have access to a sandbox environment where you see all the APIs and you begin to test your solution. At the end of the day, you do a demo to the FIRS team. And then if we find your solution good enough, and then we endorse you, and then you can move to production and begin to provide the service. So it's as simple as that. Even PwC has gone through the same process. Right now, we have, I think, close to about 50 or more than 50 service providers that have qualified, and they are doing this implementation. So you simply, if you are interested, please visit mbs.gov.ng, and then you find all the information there. Thank you very much.
Okay, thank you very much. I hope this answers the question for Mr. Inkem Joseph. Now, there's a question here, and I think this question is for Kenneth, even though it wasn't specifically stated that it's for you, but I think you'll probably be in the best position to answer. So it's from Muhyiddin Salami. He said, please assist with an explanation on how the e-invoice works. If my sales invoices are transmitted to FIRS upon integration, what happens to the cost of sales? Also, how do we address the case of foreign vendors whose invoice did not state VAT and withholding tax? I think this is a case of tax reporting.
Yes. So for now, the focus of the government, of the Nigeria Revenue Service, is actually the declaration of your sales. But like I said, there are implications on the other side, because the sales from one person is the expense of another, right? In the future, to validate input VAT claims, for example, right? There'll be a question of whether that invoice was actually fiscalized. So is the VAT you're claiming a valid VAT that has gone through the system? Was it charged and was it paid? Those would be important information before the tax authorities can give you a credit or give you a refund. And it also has another leg sitting as well in deduction. So, you know, in the first instance for your, you know, domestic cost of sales, it will be expected that the supplier would have been, you know, depending on the phase where the government is with the implementation, that they would have issued fiscalized invoices to you. So that's one. For invoices from non-residents, so let's assume you're importing raw materials. There's the National Single Window Project, which is currently ongoing, which is supposed to integrate the NRS, the CBN, the Nigerian Customs, and when goods are imported through the port, the VAT that is collected would also be reported into the FRS. Sorry, I say FRS. I forget the NRS system as well. So with that, you know, all of that claim and reporting would be automatic within the government's portal. So that's the future state. I know that the implementation of the National Single Window was supposed to happen Q1 or Q2 2026. You know, but a lot will be hinged on that. The supplier of the good may not necessarily have to register for Nigerian VAT and fiscalize their invoices, but at the point where it's coming in, you know, through the National Single Window, there'll be confirmation of the VAT and the import duties that have been paid. That's the plan.
Okay, thank you very much, Kenneth. And I hope this answers your question, Mr. Muhyiddin. So I'll take two more questions and I'll direct one to Mr. Bauer and one to Kenneth, and then we can close. And the rest of the questions that we have received because there's a lot of questions I can see, and I love the interest that our participants, are having and the engagement that we're getting. So we would send you answers to those questions after the webinar. So there's a question here for Mr. Bauer. It even specifically says, "Good morning, Mr. Bauer. How will a company be operating in oil and gas sector where output VAT already withheld at source by clients to claim its input VAT?" So that's the question tagged to Mr. Bauer. But I think this is also a tax reporting question. So maybe Kenneth, you can chip in. Yeah.
John should answer it, please. Thank you.
Mr. Bauer.
Okay, so
Kenneth,
that's an interesting question actually, because if you are in the oil and gas industry, your sales will be deducted at source by the customer, right? But you may have valid input VAT claims. So this is where your product is actually vatable. And if you're in, and I didn't hear you properly, Farida, if the person is in downstream marketing, a lot of the products except lubricants are VAT exempt for the time being until government changes that position. So it may not be that relevant for, supply, of downstream petroleum products. But let's assume you are a service provider in the oil and gas industry. So you've serviced an IOC and the IOC has taken VAT. But then you have some purchases that you can claim input VAT on, right? You are also supposed to deduct the VAT on your expenses and remit to the tax authority. So you'll be in a situation where you cannot set it off. One of the interpretation that you can take is that after you have paid, right, you have a valid claim back from the government in the next month. So you can use it to set off your next month's VAT payable on your expenses. So you then have a rolling balance of 1 month every year. And I think it's a valid interpretation you can take based on, the provisions of the various laws, the Nigerian Tax Act, right? But, I would also say that if you're taking that position, you also get confirmation or a ruling from the tax authorities, because there's now opportunity for advance ruling on specific matters. The other way to do it is to then, make the payments on a monthly basis on the VAT on your expenses, but because you cannot set it off, then you apply for a bulk refund from government and wait for government to pay you back the refund. Under the Nigeria Tax Act as well, it says that if the government does not pay you within 30 days, you can set it off against other taxes as well. So there are those, would I call it, practical considerations in the tax reforms that helps taxpayers not to be in a perpetual refund position. So that's my feedback to the question.
Okay, thank you, Kenneth. And I hope Mr. Ayokulele, this question has been answered. And if you have a follow-up question, you can actually, drop it in the chat box and we'll send you a separate reply after this webinar. Now, the last question here is to Mr. Bauer, and this is actually a very important question because it's something that I have also encountered while doing implementation. So this question says, what options are available for companies with clients without TIN and are currently unable to fiscalize their invoices? Now, in addition to that, apart from clients without having the TIN, clients that do not collect certain information, or rather companies that do not collect certain information from their clients. For example, the accounting customer party, which is a mandatory field within the schema if you're submitting your e-invoices. So what options are available for those companies, Mr. Bauer?
Okay, thank you very much, Farida. So if you look at it from the aspect of the law, it has made it mandatory for all merchants to do business with people that are only registered. which means that everyone is mandated to provide a tax identification number, right? So, but yes, we understand that in order not to also slow down businesses, right? Because before now, invoices have been issued in any manner they want, so that requirement was not there. So if you insist on that now, so you might miss out on some of your suppliers. So because of that, we simply, I think, has made the system flexible enough to accommodate. If you don't have at least TIN, supply us with the RC number or business name or business number BN, right? The system is accommodating that now. So what we do is that if you supply us with that number, then with our connection to CAC, we can validate that number and check if it has a TIN with us. We will update the system with that thing, or if it does not have a TIN, now with the new tax ID that is being also issued, we can easily do that. So that we're already doing. So at the moment, the system accepts RC and BN number, and I think that's the most second party details that the system is required, because with the thing you will be able to also get other information about the entity. At least you will get the name of the taxpayer, and this is the most important thing. So I don't see any problem with supplying other details of the transaction, because ordinarily you will still gonna need it to be provided on the invoice. And from experience so far, that is the major issues we've had at the beginning. Companies without TIN, some were even sending us the names of the entity details and RC to help them give them the TIN, and we thought we could not continue to do that, and that's why we just made it possible for taxpayers to supply, and also for non-residents. Is this suppliers or consumers in this cases? So if you also have a non-resident business that you're dealing with, that you're issuing an invoice to, so you can also use the registration number of the company of the residence of that taxpayer, right? So you can just put it and then it will go in this case. So far it was a challenge before now, but since we have relaxed the system, it's no longer a challenge, and people are doing that, right? But of course, that will go on for some time. We don't intend to continue like that, because at some point the businesses are supposed to ensure that every business you're doing with should have at least a TIN. So we don't want to slow the adoption process, and that's why we relax this. But definitely at some point, a TIN will be mandated, especially when we transit to the new tax ID, right? Because what we're doing now is that under the new tax ID, automatically we're generating tax ID for all businesses and individuals. So even if you don't supply us with the tax ID, with your RC number, we should know your tax ID, right? So what we're trying to promote is that you don't even have to provide your tax ID. As an individual, if you have an NIN, it can call up your tax ID. As a business, if you have an RC or BN, it can also call up the tax ID, right? So we're moving, I think in the nearest future, we will not have issues even asking people to provide their TIN. Thank you.
All right, thank you very much, Mr. Bauer. And this brings us to the end of our Q&A session. I would also like to thank Team, Kenneth, and again, Mr. Bauer, for sharing all your expertise and candid insights. And thank you to the audience for your thoughtful questions. So to close our session today, I'm very pleased to hand over to Esiri, who is our partner and PwC Africa Family Business Leader, who will share some final reflections and next steps as we continue to navigate this evolving tax landscape. Thank you. Esiri, over to you.
Thank you so much, Farida, and thank you for doing such an awesome job moderating the panel session. Also, thank you to our able speakers, Mr. Bauer. So grateful for the outline and the timelines that you shared for the different categories of taxpayers. I'm sure everyone would leave here a bit more informed about what to expect, and we look forward to the final publications for those. Also, thank you to Kenneth and Tim for sharing those wonderful strategic insights, as well as the call to action for taxpayers. But what's very clear from everything that's been shared is there needs to be some proactivity from all of us as taxpayers. The timelines that we've gotten from this call are really helpful, including the technology tools. The way we used to do tax audits before now is going to change dramatically. There's a lot of big data to handle, and that's something that now needs to be done using technology as a strategic enabler. And I'm very glad that we had the opportunity at least to test some of those and identify also the problems that they're seeking to solve. So this is just one of the many sessions that we'll be going through to enlighten all of our friends in the house on what to do next. We do have strategic events coming up for deep dives into everything that we've kind of touched on here, but a hands-on experience, I think, is very much needed at this point, and we've kind of done this across different industries, so it's tailored for the financial services, the consumer and industrial product services, and the oil and gas teams. We also have a tailored session for the trustees, and the timelines are shown there for the post-implementation sector workshop, which will be done starting from the 10th of March, going right up to the 19th of March. You can also scan the QR code right there. The next session we're having is happening in April 2026, which is a post-go live workshop that looks at how we are faring 100 days post the tax reform commencing. And again, another hands-on experience, one which would be happening in Rwanda. So we typically have these sessions both locally and offshore to accommodate the flexibility for our audience. On that note, I'd like to say a very big thank you for being with us from the start of this session to the end. If you ask me, I think this session was very valuable for every single one of us, those of us who listened in. And if you were unable to get every single part of the session, this session was streamed live on YouTube. The link has been posted in the chat box as well. You can go back and just look at those sessions again. The contact details for the speakers, I think, can also be accessed there. And we absolutely look forward to engaging you all in the training sessions that will be coming up shortly. Once again, thank you so much for staying with us, for being very interactive, and thank you to our awesome speakers for the wealth of knowledge that has been shared here. Have a great one. Bye.